Good evening and welcome back to Be Rich. Today I have a very interesting topic for you to discuss. A lot of startups have come in my home country, India, who are now preaching this. This is the buy now, play later. The Swedish company Klarna, funded by SoftBank and others, has burnt money and made buy now, pay later very popular. In fact, they bought an Australian company right now. And I think they are merging with one of these buy now, pay later companies is merging with Square, which is owned by Jack Dorsey. Now, what I wanted to ask you is, when the world has started to tighten now, we are now hearing reports that there is a lot of pressure in that industry. For the uninitiated, let me tell you what is buy now, pay later. That is, I can eat in a restaurant today and I don't have money, but I have some credit score. So if I eat for 100,000 rupees, which is the Indian currency, I can pay in three installments of 333 each. And if I pay on time, I don't have to pay any penalty. The restaurant in turn would have tied up with that service provider and pay him a small commission. The real kicker is the BNPL provider bets that I will not be able to pay on time. I'm credit worthy, but I cannot pay on time. So I may miss one or two assignments, one or two skips. Normally, the delinquency rate is between 20 and 25% in this industry. And that there is a huge late fee in this. That's where they make their money. But if you are very disciplined, it's free. But everybody thinks they are disciplined and gets in. And nobody can predict their exact cash flow. When cash flow goes wrong, that's when BNPL hurts. Now, in this time of growing uncertainty due to inflation and monetary tightening, both directly and indirectly, has meant that financing will not be easy for the BNPL business. And the news is that Klarna has dropped 10% of its staff. How is it going to be affected? Anish, you recently read an article in Financial Times. So how is it working?
So, with the onset of the pandemic, lot of with the stimulus and lot of monetary benefits given and inflation low, lot of fintech companies started offering buy now pay later. One such is Klarna, which is in news recently, particularly because it laid off 10% of its employees. And CEO had put out the list of employees who were sacked on LinkedIn. So everyone was furious with this CEO. So what happens is when the going was good, these guys were making a lot of money, but now, when the tide turns in monetary and in inflation terms, they are facing pressures, and so this is all unsecured loans. So they don't have any security except the credit score, or they can tarnish. Means if the people default, they'll be tarnished, as in they won't be able to get any further credit. So one example in that was a lady who used the buy now pay later to first pay her school children's education fees, then pay the school trip. But she had defaulted on that, and her 400 pound debt became had an additional penalty of 325 pounds. Imagine the amount of interest rate, which is if you calculate on the 400 pound debt on a for a 325 pound penalty. So these are rates which are unheard of. So the CEO or the companies have a mix of good and ugly, because if everyone turns ugly in your book, then the company itself won't be available. Recently there was news in the market that Byju's has sold its receivables around 500 to 1000 crores. I'm not sure about the exact number. So Byju's is a edtech company which has receivables from parents which it sold at for a 1 year at 7.75 or 8%. So these are again unsecured
Loans.
loans being given to investors. And people really don't know what they are getting into and have subscribed to that. So I don't know how much of it will be secured in terms of return.
But question is this. When the going was easy, when the tide was nice, we didn't bother who was swimming with trunks and who was not swimming with trunks. But now there are no trunks. What do you think in India? What is happening is lot of small started app-based lending. What will I think these app guys will go belly up, or they'll have to sell to a bank? What do you think?
So recently there are some regulations which have come into the app-based lending. RBI or Government of India, MeitY, I guess, has issued a circular to Google saying that in case of such apps are listed on iOS or Google, they will have to get the registration certificate granted by RBI, because you can do lending only based on if you are an NBFC. Earlier, many of these apps were not even registered as an NBFC and were available. So, Google is going to take off many of these apps from the Play Store. So, this is the challenge when you play in unmodeled gray areas or regulated areas, but you think you are smarter than the regulators. So, you will be pulled up. Now, all these app lending who are lending through app base will be taken off Play Store until you register with RBI as an. The problem came in because these app based lenders started harassing the people on the contacts of the people who defaulted because they had access to your all the contacts. So this created a problem when these people complained to the Reserve Bank of India. Then this has come back. So people who are using technology to develop fintech, they should be aware of the consequences they are doing to their own industry.
How much is this due to inflation, and how much is it due to tightening of monetary policy that this industry is unraveling?
So both are hurting this industry. The inflation is forcing the worldwide central bankers to increase rates, and when the going was good, many of these venture funds, PE funds, got a lot of money at very low rates. That was in turn pumped as capital. So if you look at net consolidated basis, all these fintechs were happening at leveraged bets. Nothing was own money. No one. It was not hard cash. Someone was pledging something, taking that money, putting that as capital, and then taking furthermore credit to run the show.
What will happen, suppose, like in case of Elon Musk, like Warren Buffett did, but of course, Warren is very safe. But if you do not have, suppose I had $1 million of Amazon, I pledged into 100,000 and invested in a stock like this without any cash flow returns. When my Amazon stocks drop, automatically I'll be under pressure and I will start putting pressure on these people. So you think the whole thing will slowly collapse. The edges are fraying already.
So if you look at the startup boom or the venture capital PE boom, I don't think so we would have heard pre 2008 Lehman crisis. All this valuation of 100x, 200x, 500x is all post the free money which started during the Lehman. Before that, you never had such obnoxious valuations given. There was a dot com boom,
Yeah,
but that was very limited for a period of time. But this party is still continuing.
continuing.
So this party will come to an end because you cannot keep doing this without having real world benefits. If the company cannot serve any value to the society, I don't think so how it will survive. Now look at even in India, Zomato, which is facing huge crisis. Now the investors are asking Zomato when it will turn profitable.
I don't think Zomato will ever turn
So
profitable.
this was in the latest earnings call. Everyone's question to Zomato was, why did you invest Blinkit? Whether Blinkit is a financial investment or an operational investment.
So what did he say?
So they were confused because now the capital is dried up. They don't know what to call Blinkit as. And Zomato, I don't know how it can turn profitable.
I don't think so at all. So guys, be very sure. Enjoy the good times while it lasts. But all this is going to go down the tube. So good old practices on debt and theft will only survive in the long term. Every time the Fed increases interest rates, we are going to be in serious trouble. I think the era of easy money is over. Thank you for watching Be Rich. If you like this content, kindly subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we will put a video. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.